Good morning and welcome to this week's Market Snapshot. What's happened in the Northern Virginia real estate market in the last 7 days in under 5 minutes. Here we go. Okay, so it has been a snowy, cold, icy last couple weeks here. As you guys all know, we had a lot of snow about a week ago, and then this past week has been just dealing with the roads and dealing with the ice. And it's actually affected the real estate market pretty significantly because in going out to show properties, a lot of the owners have not had the chance to go and shovel out the driveway or clear a path, especially for the vacant houses that are out there. So there's a lot of ice skating that's happening when going to look at property. So that's affected the buyer activity quite a bit. So we're going to dive into the numbers here and let you know what this means and what you can kind of expect. But just keep in mind that these numbers may be a little bit skewed because of the cold weather, because of the icy conditions, not necessarily on all the roads. Although I have been in some neighborhoods with some pretty icy roads, but not necessarily icy on the roads, but icy around the houses. So that's affected open house attendance, that's affected just everything as far as the buyer side of the market's concerned. So let's go ahead and dive into the numbers here and see what we're actually seeing. So as always, we're looking at, and before we dive into this too much, we've got the month stats in, so we'll see how January of 2026 compared to January of 2025. So this is going to be a little bit of a longer report. And just to give you a background, just remember that during the market snapshot, we are looking at the lead measures. We're looking at the properties that went under contract for the buyer activity and the new inventory that came on the market. That's for the seller activity. The buyer activity, that indicates demand. Seller activity indicates supply. So we have the supply versus demand ratio, and that tells us what you can expect with regards to as a buyer, when you're writing offers, how much competition you're expecting to face. As a seller, when you're receiving offers, what kind of offers you can expect to receive. So we're going to be able to show you that so that you can understand real time. As we go into the monthly numbers, I'll tell you why those are different when I get to that portion and why it's so important to look at the lead measures versus the lag measures, which is our monthly report. So what we've got here is our buyer activity is our black line. These are the properties that went under contract in the last 7 days. And then our teal line here, I guess that's teal, indicates the inventory or the seller activity. And you can see that this last week, so when the snow came, you can see we had a huge dip in activity. This past 7 days, we've seen an uptick in inventory come in. You can see we had a downtick in buyer activity and we had a slight uptick. Now, I was saying that the buyer activity seems slower, and that is true because we've had a lot of buyers personally that have delayed getting out and looking. I think this uptick in buyer activity without the snow, without the ice, would have been much higher. So it has affected it. Even though it did increase, I think it would have increased much more significantly. So we are seeing things kind of trending upward. We're seeing inventory trending. It was trending upward. We're going to see what it does for the spring. I have a feeling that once this weather clears and we enter the spring, we'll see that inventory is starting to spike again. And I expect buyer activity to do the exact same thing, just continue upward. Just like this is where we were last year at this point. And you can see our buyer activity we are at February 6th right now. This is where we were last year at this time. You can see that we're slightly higher, and you can see that inventory is significantly higher than where it was last year at this time. So the market is more active than it was this time last year. And if you take this and you look at the buyer's market versus the seller's market, this gray line right here indicates a neutral line. So anything above is going to be a seller's market, anything below will be a buyer's market, and you can see that we are trending up into that seller's market. So that's typical for the spring, and we're expecting this to be a pretty strong market this next few months because interest rates are staying fairly low. They've kind of plateaued, but they're still at a much lower rate than they have been since, for at least a couple of years. So buyers are certainly coming back out. Okay, so let's see what the contracts have actually looked like. So it was interesting because of the lack of buyer activity, we saw the contracts move a little bit more in a favorable aspect of a neutral market. So contract price, 46% went under list price, and then 54% went at or above listing price. You can see that more properties sold again within 7 days, but even some of those, that 26%, only 18% went above asking price. So even some of those that sold in the first 7 days only went at asking price. That indicates that there wasn't as much competition as there was the week before. Remember, I told you about the week before the snow came. We had a buyer that won a property that had 7 offers and it had only been on the market a day and a half. So we were seeing a real big uptick in that buyer activity, and then the snow kind of slowed it down. So 7 days on the market was 26%, 8 to 21 days was 28%, and then 46% went over 22 days. These two numbers matched almost exactly. That's not the trend that we've been seeing. We've been seeing that even some of the markets that are properties that were staying on the market more than 22 days were still going at or above list price. So we'll see what these trends do as we get out of the snow, but this is just a snapshot of what happened in the last 7 days, so what you can expect. Financing versus cash, there were only nine cash transactions this last round. Contingencies went up significantly, so a lot of buyers got a lot of contingencies. We had 81% got their finance contingency, 81% got their appraisal contingency, and 75% got their home inspection contingency. So these are the biggest benefits for the buyers right now. Even though there's competition, you're still able in most situations to get your protections. It is situation specific. Our buyers that won the contract for a week and a half ago against the 7 offers, we were able to get all their protections in place, but we had to be strategic about it so that they could still submit a clean offer. So if you have questions on how to do that, reach out to us. We'll be happy to help you with that. Contract to close, this isn't a real significant number, just kind of shows you how long properties sat in escrow. So once the contract was ratified, how long did it take to close? But I did want to add in, we have a lot of sellers out there that are kind of pushing back, thinking that they are no longer covering buyer agent compensation because of the settlement. And the fact of the matter is 97%, and this is usually 97 to 99% of the contracts came through with the seller ended up covering the buyer agent compensation. So sellers, you have to be realistic with that. And most of that compensation is 2.5% or above. So you can see that 81% was either 2.5% all the way up to we've seen as high as 4%. So that compensation is still occurring. So sellers need to be realistic. Okay. So what does this mean for buyers? Buyers, when you're going out and looking this week, it could still be a residual. You still could have an opportunity to not have as much competition because of the weather. But be prepared. If you see a property you like, get with your agent ASAP, go and look at that property, have your team in place so you can move quickly and do the things that you need to do to be able to protect yourself and still submit a clean and strong offer. If you're a buyer that is looking to pay as little as possible for a property, you need to get out there as soon as possible because that option is going to be less and less as we go into the spring. And you need to be prepared that if you're looking at a property and there are multiple offers, you're probably going to lose if you're trying to pay as little as possible, because there will be other offers out there that are going to waive their contingencies, that are going to bid up the price and going to win that offer. So just be strategic, talk to your agent. If you're insistent on not getting into a bidding war, there's a class of properties that you can look at where it's less likely that you'll be in multiple offer situations. But if you're looking for that turnkey, great property, just be prepared on how to compete. And there are ways that you can compete, still protect yourself, and still put in a strong offer. So make sure that your agent knows how to do that. If you're not working with an agent, or if you have questions on how you can do that, feel free to reach out to Kelly and me. We would be happy to do a buyer strategy consult with you. We will go through how to submit that strong offer, how to find these unique properties, how to find off-market properties, how to put together a financial plan for what you're doing, and just making sure that you're protected. Reach out to us at 703-783-2143. Okay, now we're going to get into the monthly stats, and we will go from there. Okay, so it is time for the January 2026 versus January of 2025 monthly stat market report. Here we go. Okay, so we talk about on our market snapshot quite often why we use those lead measures so that we can make real-time decisions. This monthly market report is important because it gives us a bird's eye view of what's happening in the market. But it's important to keep in mind, you don't use the monthly market report to make real-time decisions on how you're going to write an offer if you're a buyer, or what kind of offers you're looking for as a seller, because the statistics and the numbers in this sold data is quite often 75 plus days old. Well, how does that happen? Well, the information that we are going through, we're going to go through the sold data for January. So let's say that a property sold January 1st. Okay, that's going to be included in this market summary. If that property sold January 1st, it likely went under contract December 1st or sooner. So that property went under contract December 1st, right? That December 1st activity is what we're looking at, rounded up into this report. Well, today is February 6th. So not only was it December 1st, January 1st, then it was January 1st to January 31st to be included in the January sold numbers. And now it's February 6th because we had to have time to let all the numbers get in and aggregate the numbers, if that's the right word. So this information can be as old as sometimes, 60, 75 days old. So you can't use it as real-time data, but you can use it as an overall picture of where the market is trending. So that's why it's important to look at it. All right, so let's get into the data. So new listings in January of 2026 versus 2025, we're up 1.1%. So we went to 837 versus 828. The number of sales were down. We were at 577 in January 2026 versus 586 January 2025. So it's down 1.6%. So what that means is supply went up, demand went down a little bit. Now, this is not something that, it's something to look at, but you have to keep in mind that last week of January was when we had that snowstorm that came in. So that really affected a lot of transactions at that time. So we were down just a little bit. So the net was a little bit moving a little more towards the buyer's market. So let's see if the rest of the information trends with that. Days on market, January of 2026 was 31 days. January 2025, I put plus 4 days. I don't know where I got that. It was actually plus 7 days. January 2025 was 31 days. Now, January is always the highest month. It's been that way for years and years and years. The days on market sits higher in January. And I think that's because December tends to be a little bit of a slower month with regards to transactions. But what happens here is in 2025, we saw an upward trend on days on market. And we've been talking about that each month for a while. Properties are still taking a little bit longer to sell, but they're still appreciating in value in a general sense. So, so that 38 days on market just follows trend of what happened towards the end of 2025. But it doesn't mean that the market is necessarily crashing by any means. Months of inventory, this is very important. This is if you took the number of properties that were on the market right now and you took the number of properties that had sold and you figured out what that ratio was and you continued at that rate, how long would it take to sell through all of the inventory that is on the market? That's called the absorption rate. Anything 5 to 6 months is considered a normal market. Anything 6 months and above is considered a buyer's market. Anything 5 months and below is considered a seller's market. And you can see we have been consistently at 3 months. So we're still in that seller's market. Even though properties are taking a little bit longer to sell, we're still in that seller's market. Now, median sales price. This is something that we need to dive into a little bit more, and we've done this over every couple of months. I'll dive into what median sales price means. So basically, median sales price for January 2026 was $679.5. For January 2025 was $700. So it was actually down 3%. Now, does that mean that home values went down? That does not mean that home values went down. So what does that mean? Median sales price is calculated as the number that falls right in the middle of the sampling of the numbers that are the transactions that occurred. So it doesn't mean market value, it's that number that fell right in the middle. When you have a large sampling, it's the best number to use so that you don't have like a really, really high sales price skewing the average up or a really, really low sales price skewing the average down. So we don't use average sales price, we use median sales price because it's really the best number that we can use to give us an idea of market value. But it doesn't truly indicate market value. So what do I mean by that? So here's a simple example. Month one, these were the sales. Okay, we had 11 sales. 3 million, 2.75. You can see the numbers. 500,000 falls right in the middle. So 500,000 would be the median sales price for month one. Month two, you can see the sales for that one. Again, now look at these numbers. These numbers are all higher than these numbers. These numbers are all higher than these numbers. But the one that fell right in the middle was 400,000. Okay, so if you look only at the median sales price, that means that for month one, it was 500,000. Month two, it was 400,000. That's a drop of 20%. So the media is going to present this, in this situation, the media is going to present this as home values are dropping 20%. That means that a house that you bought here that was $500,000, you could now buy for $400,000. And that is not the case. You can see all these property values were going up. You have to look at market value on an individual property basis. Neighborhoods can be going up and down. Cities can be going up and down. Counties can be going up and down. Nationwide can be going up and down, but they're all independent of each other. And a lot of people are listening to national news and looking at our market, and they're sitting on the fence waiting for prices to crash, and we're not seeing evidence of prices crashing. So that's why it's important to understand what the statistics are and what they actually mean. Now, why did the median sales price go down in January versus January? That's just where the number fell. Maybe people were looking at less expensive properties. I don't know what the answer to that is, but on trend over the year, market values went up over 3% in Fairfax County last year. So we did appreciate 2025. It's not the 15% that it used to be, but it did still appreciate. So it's important to understand that. And now we can look at history. Okay, so nobody can predict what's going to happen. Nobody has a crystal ball, but we can look at history and see, okay, what tends to happen. So the first thing we want to look at is since 1942, and this is through 2022, 2023, 24, 25, these numbers all went up. We've all seen the appreciation, so there's no question on that. But since 1940, there have been 73, we'll say now 76 years where we've had positive appreciation. Okay, that's 76 out of 84 years. There have been 7 years where we actually had negative depreciation or negative appreciation or depreciation in home values, and there's been 1 year where it was neutral. In those 7 years, 5 of those were in the 2007 to 2011 range when we had the huge financial crisis, which was caused by the real estate industry and the improper lending techniques that were being used at that time. So basically, 5 years we had a huge price drop, and there have been a lot of things that have been put into place to correct that. So there's a lot of equity out there right now. So even if values did drop a little bit, a lot of people aren't going to go into foreclosure because they have equity in the home. They would just sell it. You're not going to let it go into foreclosure. You would just sell it and pull your money out of the property. The only other situation where it happened was in the 90-91 range, and there was a little bit of a decrease there. So if you're waiting for a market crash to happen, historically, there's not a lot of evidence that it is going to happen. And if you look at the decade, there has not been a single decade where there has been a loss in equity of properties, because statistically they have always gone up. So if you're buying a property and you're speculating in over a year or two, that could be a little risky. There might be a little fluctuation in the market. But if you're planning on holding a property for 5 to 10 years, you're going to be okay, and you're going to build that equity, if that makes sense. Okay, well, what about the election? The election had a lot of effect on what happened. It felt like, even in our area, it was affecting a lot, but we still saw appreciation over 3% throughout the year. If you look at 7 of the last 8, now it's 8 of the last 9 presidential elections, property values have gone up after the election occurred. The only time that did not happen was 2008, which was the great financial crisis, which was caused by the real estate industry. So if you're waiting for market crash to come, you're really waiting on the fence, and you're costing yourself money, because even at only a 3% appreciation, if you're looking at $700,000 this year, that house that was $700,000 is now going to cost you $720,000. And if you wait another year, it's going to cost you almost $750,000. So you're going to end up pricing yourself out of the homes that you want. If you would like us to look at your situation individually, please reach out to us, either from a seller's perspective or a buyer's perspective. We'd be happy to sit down with you. 703-783-2143. Have a great month out there, and we'll see you in March to go through the February numbers. Take care.